Hello, Accounting Superstars. This is Professor Don Bush from the Accounting Superstar channel. So glad you're here. I've been a professor for about 30 years and a CPA for about that long, and I've got great ways to explain accounting. So welcome aboard. Hey, today in Colorado, it's not too bad out. A little cloudy in the low 80s. Beautiful day, absolutely beautiful. It's June, what the heck is the day? June 18th here, 2021. So if you're watching this, who knows? Maybe you're watching this 10 years into the future. Kind of wild to think of things that way. But anyways, today's lesson is designed for people in managerial accounting, or probably their second semester of accounting, maybe even cost accounting if you didn't learn this the first time. Okay, so but glad you're here. I've got a good ways to explain this stuff. Hey, and by the way, while I'm thinking of it, I've got a webpage called accountingsuperstars.com, and I've got all my videos listed by topic, so they're easy to find. So today's lesson is called the cost of goods manufactured statement. So I've got a real easy, simple way to do it that I really like. You'll never ever see this in a textbook, and maybe your professor may not like the format here that I'm showing you. I don't know. Although I've had a few professors contact me and ask if they could use the way I teach this. So I'm sure, why not? But the way I do it, it's more straightforward. It's a lot easier to understand. In a future video, I'll show you guys how to translate this into a statement that looks like the textbook, all right? But I've never ever seen anybody else ever do it this way, but to me it just seems so much easier. But if nothing else, at least this gives you an idea of how it works, all right? It's easy to remember too, the way I do it. So here's what's going on. Here's some information. We've got for the month ending July 31st, 2001. So we're going to figure out how much was manufactured in the month of July. And these statements cover a time period, so they need to be dated month ending July 31st, all right? So we've got beginning raw materials of 100, raw material purchases 500, ending raw materials of 75, direct labor, manufacturing overhead, beginning work in process, and ending work in process. So we got some information here. I'll show you how to do it. It's a piece of cake. It sounds complicated, but it isn't. So here we go, coming down here to, here's the key to success here, guys. This is how you solve it. It is so easy. It's the exact same thing as the cost of goods sold formula. So the cost of goods sold formula, here's how it works. Beginning inventory plus purchases minus ending inventory, or less ending inventory, is cost of goods sold. All right, that's the formula. So let's put in some numbers just to see how it works. Suppose your beginning inventory is $10 and you purchase $50. It's sort of like this. You have 10 apples to start with. You buy 50 more apples. How many apples do you now have? So you now have 60. And then you sell a bunch of apples, and at the end of the day, you have 15 apples left. So how many were sold? So in other words, 10 plus 50 is 60. Minus 15 is 45, all right? You started with 10 apples, bought 50 more apples. At the end of the day, you only had 15 apples. So how many did you sell? 45. It's just that easy. Now, here's the key. Since we've got raw materials inventory and work in process inventory, all you got to do is write this formula down twice. That's essentially it. If you can write that down twice, you can do it. So here we go. In fact, I've got it listed here as a question. Can you write the cost of goods sold formula twice? Once for raw materials, another for work in process. So I'm going to split the screen so we can see a little bit better. All right, so here's how these statements are titled. You've got the name of the company, cost of goods manufactured for the month ending July 31st, 2001, whatever year it is. You need to have these three items because if you don't, it won't take long. You won't know what you're looking at. So especially the date, my goodness. Always have a date, and it's for the month ending. All right, so here's all you do here, folks. It's just this easy. Let me get up to the correct information here. Here we go. All right, so it starts out with beginning raw materials inventory. Here we go, put in the number, and I'm just getting the number right from here. So in case you're wondering, where are you getting that? Here it is, right there. Okay. Plus raw material purchases. It's going to be 500, and where did I get that? I got it from right there. There we go. Minus ending raw material inventory. There we go. Where'd I get that? Right here. So you just subtract it out. Now that's going to equal cost of direct raw materials used. All right. So all we're doing, 100 plus 500 minus 75. If you do the math here, it's going to be 525. Okay. 100 plus 500 is 600, minus 75 is 525. That's all there's to it. So now, essentially what we do is we do the same thing again, but for work in process. And you might be thinking, hey, if we're doing the exact same thing as before, why do you got so many more lines? I'll show you why. It's pretty easy. So it starts with the same pattern. Beginning work in process. So we look for beginning work in process. There it is. It's 50. I got that right from there. And we're going to add to that direct raw materials used. So where are we getting that number? Here's the number right here. 525. Where'd it come from? Well, we just calculated it just a moment ago. Right there. So that number drops right into place. So you just slide it down into place. Now, work in process, it's the place in the accounting records where all the costs come together. So the next thing we're going to add is direct labor. So here's direct labor. It's $400 right from there. I'm going to drop it into place. There you go. And the other cost is manufacturing overhead. So we're going to add manufacturing overhead. So where is that? That's right up here, $300. And I'm going to drop it into place. There we are. So what's going on with this work in process is that the direct materials, the direct labor, the manufacturing overhead all come together at work in process. So we're almost done. All we're going to do now is go less ending work in process. And that's going to be a minus 75, and we're getting it right from there. All right, so all you do then is equals cost of goods manufactured. So all we're going to do is go $50 plus 525 plus 400 plus 300 minus 75, and we have it, $1,200. So I'll put that in red because that is what we're after. That's the answer we're looking for. So folks, I know that the top part and the bottom part here don't look exactly alike, but really what it is, it's the cost of goods sold formula. It's just that formula right here. It's a little bit expanded for work in process. But if you think that direct labor, raw materials, and overhead go into work in process, then you can remember it. So there you go, folks. Hope that helped you out. I hope you enjoyed this video. If you did, hit that like button and the subscribe button. That way, I'll know, and YouTube will know that you like these videos, and you'll get to see more of them. So check out the webpage, accountingsuperstars.com, for more of these videos. They're listed by topic, so you can't miss. So until next time, over and out.